Hey guys, thanks for watching. Welcome to Smart Money Mind. My name is Ben, and in today's episode, we're going to be talking about the stock market for beginners. And this is about what is the stock market? How do I make money from the stock market? What advantages? How can I take advantage of the stock market itself? So the stock market has been around for hundreds of years. It aged back to 12th century France, where traders were dealing with agricultural debt. But long story short, from there it has evolved and grown into what it is today. So essentially, the stock market is a place where publicly traded companies like Google or Apple or Tesla or Walmart, it's where they can sell a portion of their company to the public, and the public can buy those shares and be a part ownership of that company. What the company does with that money is they can go and expand their company, expand their production or their real estate, or make their company better in different ways. Obviously, the stock market can be extremely confusing with all these news, all these factors, all these laws and regulations, and all these hundreds if not thousands of publicly traded companies. But we're going to break it down and give you a very simple example of how a stock works with a company. For example, imagine my friend Anne. She starts making cookies and she starts selling them at the farmer's market, and they start selling really well. So Anne decides to make a company for Anne's cookies, and she opens up a store, and those cookies as well start to sell really well. So she starts thinking of other recipes, she starts thinking of opening new stores, hiring new employees. She wants to expand her business so that her cookies can take over the world. However, Anne doesn't have enough money. She can only get money from three ways. She can either go to the bank and get a loan for expanding her business. She can also go and get a private investor, so borrow or have someone invest their money into the company so that she could use it to expand her business. Or what she could do is, with her shares of her company, she can sell a portion of her company to the public. So after serious consideration, Anne goes to the drawing board, does her calculations, and she figures out for cookie world domination, she only needs $50 to expand her business. So what Anne decides to do to raise that $50 for her company is she decides to sell part of her shares. She has 100 shares, so she decides to sell 50% of her company, so 50 shares at $1 each, thus letting her raise the $50 that she needs. And when she does this is called an initial public offering, called an IPO. This is where she decides to figure out how many shares and at what price she decides to sell those shares out to the public. So once Anne figures out her IPO for her company will be listed on a stock exchange. And it depends on the location of where her company is. So it could be the New York Stock Exchange, the NASDAQ, the Hong Kong, Shanghai, wherever that may be. At that point, people from all around the world can go buy into her company shares. At this point, the public can buy Anne's Cookies Incorporated on the public exchange. So they can one person can buy one share at $1 for 1% of Anne's Cookies Incorporated, or one person can buy all 50 shares of Anne's Cookies Incorporated for $50 and own 50% of her company. There are obviously rules and regulations about how many shares and share ownership of an individual person of a company, but that is generally how it'll work out to be. Once you have shares of the company, you technically have ownership of the company. And the more shares you have and the more percentage of the company that you own, the more say you have of the company's operations or the direction you want it to head. Say Anne doesn't sell all 50 of her shares. Instead, she decides to sell only 49. So that's only 49% of her company sold to the public. Anne still is a 51% shareholder, making her a majority shareholder. That means all the decisions for Anne's Cookies Incorporation still goes through Anne, and she still makes most, if not all, of the decisions. But let's say she does decide to sell all 50 shares, 50% of her company, out to the public, and let's say Thomas decides to buy all those shares, making him a 50-50 split share owner with Anne. At this point, decision making will have to be up to those shareholders of the company to make any sort of decisions. Anne will no longer have final say for any or operational or future looking decisions for the company. At this point, Anne takes her $50, which is 50% of her shares, and she's able to start expanding her employee, start incorporating new recipes, start training new employees for the jobs, and starts expanding her business and opening new locations all around the world. As the company starts making more money, has more footprint in the world, and starts producing financial reports that is saying that they are earning more and more money every quarter, more people will be interested in buying shares of Anne's Cookies Incorporation. We interrupt you for this breaking news. Research recently shows that cancer patients eating Anne's Cookies has a 90% recovery rate. In other news, Anne's Cookies Incorporated has opened their first store on the Galapagos Islands, the first store ever created on that island. Back to you, Ross. So as your company continues to generate more positive news and it shows that it has money-making potential, more and more people want to buy into your company. So for the first 50 people who had one share of your company at $1, maybe someone else is willing to buy it for $1.20 because of supply and demand. When someone buys it for $1.20, the stock price goes up to $1.20. Perhaps the next person is willing to buy it for $1.30, and if there's a seller willing to sell it for $1.30, then that transaction goes through and the new stock price will be at $1.30. For the person who bought at IPO at $1, he is now selling it at $1.20 to another person. That person effectively made 20 cents because of the potential of your company and your company's value going up. Vice versa, if your company starts doing poorly because of negative news, your company is starting to miss targets on sales, or perhaps there's scandals saying, and the CEO is taking money and siphoning it into her pockets, then the company's value will start to drop. Instead of $1 that people initially bought at, people might have to sell it for 95 cents or lower. The stock market is just this. It's hundreds and thousands of people trading shares of companies for a little more or a little less every minute, every hour of every day, except for weekends. Why do a lot of people still have a negative attitude towards the stock market? You have to look at the obvious examples of 2008 stock market crash and the housing market crash, and for example Lehman Brothers going under and going bankrupt, and a ton of people losing their retirement funds. Obviously the stock market contains risk, but it's about how we manage that risk that you can take advantage of winning in the stock market. You can always go to the casino and put your $50 on red on a roulette, but your chances of winning are less than 50% because don't forget there's 0 and double 0. While in the stock market, you can always look at a company's financial statements. You can look at their product development records, their news articles, and you can always look at their chart history, and you can always read patterns on those charts. By having all this information, you can make an educated guess to see if the stock will go up or go down. And this will increase the probability of you winning in seeing if a stock gains in value. Remember, to participate in the stock market, you have to have a smart money mind to analyze the companies that you're interested in and also the economy in general. It's super easy to just go to the casino, plop your money on black or red on a roulette table, and just let it spin and just watch it. But winning or losing, you really have no control over that aspect. However, if you take your money to the stock market, you can think about in Anne's case, in Anne's cookies case, you can look at maybe her competitors are going out of business, and this gives Anne's company a bigger footprint in the cookie market. Maybe Anne's chart in the stock market is on a steady uptrend, and maybe the cost of sugar is decreasing, and perhaps that would lower the cost of Anne's cookie making process. And with that, Anne can have a better net profit from her cookies. So by incorporating all this information and analyzing the market and the company as a whole, you can have a much better probability and chance of determining if Anne's Cookies Incorporated will do well in the future. And don't forget that in the stock market, it's not just driven by the fundamentals of how the company is doing. It's also driven by human emotion, human psychology, such as greed and fear of losing money. If a chart keeps going up and up and up, people fall into a state of euphoria, thinking that nothing will go wrong and everything's jolly and dandy. However, if the chart keeps going down and down and down, then people are fearful. People want to sell and they want to get out of that market as soon as possible. And if you put together human psychology with the fundamentals of a company and you put it together, then you have the stock market. And all these things you can study on, such as human psychology, or you can dive deep into financials and accounting and understand what the company is really doing. There are always different ways to participate in the stock market. There is trading, so that could be short term for a couple of pennies up and down, or you can do a swing trading, which is holding a stock for a certain amount of days or a certain amount of weeks and trading and buying and selling that way. Or you can just put your money into full investment and just keep your money in there and never take it out and ride the waves. But we'll leave this for another video that I'll be doing really soon. But at least now I hope you have a basic understanding of how the stock market works, how you make money from it, and how you can take advantage of it. If you want to learn more about stock trading or stock investing or stock markets in general, leave a comment below and let me know what your thoughts are and what kind of information you're looking for. And before you dive deep into the stock market, make sure you smash that like button, you hit that notification button, and subscribe to my channel for more videos in the future. And have yourself an excellent day.